Yo, what is going on, you guys? It is Zyhro back again with another trade recap here on YouTube, and I'm pretty much going to show you how I entered this trade and my thought process going, into this trade, into market open in New York session. So here, I was pretty much just identifying the trend. I wanted to react how price was going to open up at 8:30 a.m. Well, 9:30 a.m. at New York time, but 8:30 for me. So here, I just wanted to see us tap into an imbalance. So here, I was looking at the 15-minute to see if we would tap into this imbalance and respect it again, since we respected it twice already before pre-market. So I just wanted to make sure to see if we were going to actually respect it again. And if we were, then I want to kind of look at it at a smaller time frame. That way I'm actually getting more pinpoint precision, like fair value gap or an imbalance like an order block that we could end up retracing into. So exactly what I found right here under OTE. These are our custom OTE settings, and these are only available to my mentorship, so I won't leak them here on the YouTube. YouTube. But here we are on OTE. Here we tag into this imbalance, which I would call the last fair value gaps of the series, since we had a good down, series here. Then we will go ahead and call this the last fair value gap. So with that, I don't know if you guys know a trading concept called LFEG from Trading Lewis YouTube. I'll go ahead and link it down in the description if you want to know exactly that concept. But yeah, I got that concept from him. It's like the last fair value gap. It just makes sense because it's within OTE, so it'll probably have a higher rejection rate. So from there I started using it. And then here we have that last rally gap retrace, and we did see rejection that we did wanted. And here a lot of people entered on the IFEG and then had their candle or their stop loss above this displacement candle, and they got taken out. But you could have used a protected high there. Honestly, it's just a couple ticks away. It didn't matter like on like money wise. If I'm being honest, you should have just left that at the protected high. But even then, I was waiting for a clean CISD because that's my model entry. So that's when we got it right here. It's a 2 candle CISD. Here we did sweep out liquidity and cause a significant pullback and then went back up. So this is now classified as the CISD. After that, we did enter on the displacement. So our entry was right here at 24,471. And then from there, we just watched it bleed. And then I went break even right here at this wick low. I took TP here at this very wick low here because we had SMT, I believe, with ES at the time. So here's that very wick low, and I think we were right here still. So I took out some contracts there. And then at the same time, I wanted to target that London low, but on NQ we fell super short, and then we ended up edging that. So I wanted to see with obviously more clarification if this was going to be a valid SMT or not, and it was. And I'll show you how you could have caught this trade as well using the same model and the same structure pretty much. So here, I just pretty much took out my position after this candle, since I seen a huge rejection here and a following displacement candle. And then from there, I didn't want to, see my my runner just run and hit trailing stop, so I just took out my contract manually. So there, ended up going in with 4 contracts, took 2 here, took 2 there, a total of like I think $500-$600. But I was in drawdown too initially, so yeah. Other than that, here I'll show you how to get to that bullish play too as well. So here we have a massive imbalance that we're still respecting, that we could still use. And here we have something called engineered liquidity, right? So on ES, we did sweep these lows, causing an SMT divergence, since one asset that's correlating on the other side needs to be matching, but this one went out of its way not to match anymore with this asset. So on ES, we ended up sweeping this low, and on NQ, we did not sweep that low, so that causes an SMT. After that, we see that we do respect this imbalance here because we do spot rejection there. But if we want to make sure on a lower level, we're not going to really find one, mainly because this imbalance is too big. Same thing on the 1 minute, it's going to be tracing back into there. But just using natural liquidity and seeing how the rejection is working out, you go ahead and enter from there. And then the same model entry just forms. Here we have a 3 candle CISD. This CISD is significant because we swept liquidity here at a down level. 2 liquidity levels here. So one right here and the other one right there. So this CISD is significant. And at the top to top that off, we do have an IFEG there, and this is pretty much what I do. I top both of them together, and I enter only on the CISD, so my entry would have been this candle displacement right there, and then I would have just targeted the recent highs that are showing up above. So the trade would look like this, since we have relatively equal highs up there, and then my stops will be at this protected low. Since we did sweep those lows, created an SMT and created rejection there, that is a protected low for me. So from there, we'll just go ahead and watch it play out, and then it'll probably hit, New York AM high. But I'm gonna go ahead and show you the Discord, how everything's been going down. If you guys want to join, I'll go ahead and leave the link in the description. But since 8:30 a.m., I've been calling this same play out, looking for it, and I've pretty much been patiently waiting. And then from there at 8:45, we did enter, and right at like the very same minute of that candle displacement, we ended up going up 103 ticks. So from there, it was a good day. We ended up hitting take profit there, and that's pretty much all. We saw my students bank there. Even my other students banked on the longs here because that play was super clean. So it just only made sense to get into these longs because finding that rejection off that gap and then natural liquidity that's being swept. And then from there, we did enter on a CISD and IFG entry. And yeah, and he just ended up trailing his stops and ended up getting out. So perfect play. Honestly, it was pretty nice that we ended up talking about it before and then seeing that same play that my student took. So that's pretty cool. But yeah, other than that, that's pretty much it, how you could have banked on both sides in the market today. This trade I could have taken myself, but I only do one trade a day following my rules, and I'm really strict on those. And at the same time, I don't need really to be over leveraging my accounts like that. So yeah, that's a trade of the day. Honestly, really beautiful price action, and I couldn't really, be any more happier than the result that I got because this is, really clean price action. So I appreciate you for tuning in. Hopefully, you guys learned something, and the awakening's coming out soon. So stay tuned.